So in this video today, we're going to be talking about how to invest $1,000. And this is really the point that most people are at when they're ready to make a more serious investment, because oftentimes I'll have people approach me saying they have, $100 to invest or maybe $500 or so. But by the time you have $1,000 to invest, that is actually a pretty sizable amount of money, and you definitely want to be more careful, or at least put some more research into what you're actually going to be investing in, because you should respect that $1,000 and really be looking for, a sound investment option. So what I'm going to provide you guys with today are, in my opinion, what I feel are 7 of the best ways to potentially invest your first $1,000. And then also I'm going to be talking about a couple of options here that maybe are things that you didn't really expect, but they're very important steps you want to take financially as you begin to become an investor. Now, if you are completely new to investing and this is a new realm and new world for you, I want to go ahead and let you guys know about a completely free investing course. I literally just finished this thing up a couple of weeks ago, and it's about 4 hours long. Pretty much goes from A to Z, everything you need to know as a beginner entering the stock market for the first time. That's going to be the top link in the description below. And no, this is not a free course where then I upsell you to a paid course. It's a 100% free, very comprehensive investing course. Top link in the description, or it is freeinvestmentcourse.com. So I would definitely recommend taking that course or bookmarking that page for later if you are looking to learn the ropes and the basics as a stock market investor. The other thing I want to mention really quick, I'm going to include timestamps down below if you guys want to skip ahead or move to different sections of this video. And I'll also be including links to a couple of the different brokerages and banks that I recommend here. Some of those links are affiliate links, and that means that at no additional cost to you, I do earn a commission in the process if you use some of these links. So it's a way for you guys to give back to me at no additional cost to you. So I certainly do appreciate your use of those links. But that being said, let's get started with number 1 here. And in my opinion, this is the best way you can start out investing your $1,000, and that is by setting aside an emergency fund. Now, I know what you're saying. You're going to say, that sounds really boring. I'd rather invest my money and see my money grow. But one of the very best things you can do with $1,000 is literally just set it aside in a rainy day fund in case of emergency. And I'm not just, saying this because it sounds good to me. I actually have a statistic here to back this up. So Career Builder did a study, and they found that 78% of workers, the majority of workers, the vast majority, are all living paycheck to paycheck. And if you're not familiar with what that means, basically that means that every single week they run out of money, and then they don't have any more money until that next paycheck comes in. And the problem you run into when you're in this type of financial situation is if you have any unexpected expenses come up, like a car repair or a medical bill, well, when you're paycheck to paycheck, what you're going to be doing is putting that on a credit card and using debt, to pay for these unexpected expenses. So rather than doing that, rather than reaching for the credit card and being in a paycheck to paycheck situation, and maybe you're saying, well, that's not me, but statistics are telling me that 78% of you guys watching this video are most likely paycheck to paycheck. Well, if you're in this situation, guys, be honest with yourself, and one of the best things you can do is take that $1,000 and set it aside for an emergency fund. And no, buying the new iPhone is not an emergency. Going on vacation is not an emergency. Emergency fund means, car repair, dental bill, all of a sudden, your furnace goes out. That is what an emergency fund is designed for. Now, there are a couple of things I would recommend doing here. A lot of people make the mistake of taking their emergency fund, leaving it in their checking account where they have easy access to it. So what I recommend doing is putting that money in a completely separate online savings account. Now, as far as online savings accounts go, one of the best ones out there in terms of the interest you're earning right now is Betterment Everyday Savings, currently paying 2.38% APY. So if you guys are looking for a really solid online savings account that's basically, paying the highest interest rate on the market right now relative to the opening balance, Betterment Everyday, you really can't go wrong with them in terms of the interest rate they are currently paying. Your average savings account at a traditional financial institution is usually paying 0.06%, very little interest. So if you are going to be putting your emergency fund in a separate bank account, why not earn a high interest rate and a higher yield than your traditional bank account? So if you guys want to check out Betterment Everyday Savings, that's going to be linked up in the description below. As I said, they're currently paying a 2.38% APY, and the minimum opening balance for an account with them is literally just $10. So if you just want to open it up and ease your way into building up a $1,000 emergency fund, you can open up an account with just 10 bucks. So now let's assume you're already in a situation where you have an emergency fund in place, you have your rainy day fund, and you're saying, where else can I invest this $1,000? Well, option number 2 here, and one of my favorite ways to invest, is to be a stock picker. So let's say you are in fact interested in being an individual stock owner, and maybe you have a couple of companies that you really enjoy their products or their services or whatever it may be. Well, one of the great options you have available to you is to go out there and buy shares of that company's stock and share in ownership of that company. So one of my favorite ways for people to invest $1,000 is to pick maybe 1 or 2 of their favorite companies out there and then become a shareholder of that company. And maybe you're not going to slam it out of the park, and maybe you're not going to, have a crazy good return with this company, but I will tell you from my own personal experience, you will learn so much as an individual stock owner. Now, it's not for everybody, and I'm going to have an option for you guys in a little bit here if you don't want to be a stock picker. But if you're interested in that active selection with your investments, I think it's going to be one of the best learning experiences for you out there to basically figure out what are your favorite companies out there, what are your favorite products, and then investing in that company stock. Now, what I will say is I wouldn't recommend just picking a random stock out of the blue or buying into penny stocks or anything like that. But if you do have companies out there that you are knowledgeable of, that you understand, and that you enjoy, well then why not buy a couple of shares of these companies and have that be your $1,000 investment? So for example, I love Apple products. I'm an Apple shareholder. And so if you're a fan of Apple or Microsoft or maybe some of these different companies out there, maybe you love going to Chipotle, well, maybe you decide that you want to be an owner of one of these different companies. Now, as far as trading stocks goes, there's a variety of different platforms out there. And the one I want to recommend to you guys is called Webull. Now, Webull is a newer trading platform, but they offer accounts to people with $0 minimum, so there's no minimum to open an account with them. And they also charge $0 in commissions, $0 in fees. It is literally 100% free investing. And they even go so far as to offer you guys a completely free stock just for opening an account with them and funding it with $100 or more. So if you guys want to open an account with Webull and get that completely free stock, that's going to be linked up in the description below. I went ahead and did this a couple of weeks ago, and I ended up getting a free share of Ford stock, which trades for around $10 per share. It's basically a lottery system, so you may get a very high value stock or a lower value stock. But for me, opening an account, funding it with $100 and getting a free $10 stock, that was a no-brainer for me. So if you guys want to get that immediate ROI there and get that free stock, that's going to be down in the description below. All you have to do is open and fund with $100 or more. So option number 3 for investing $1,000 is one of my personal favorites right now, and that is investing in crowdfunded real estate. Now, this is actually a relatively new investment because prior to changes of certain laws, this type of investing was just not accessible for what are called non-accredited investors. So accredited investors are high net worth investors that are fiscally able to take on a certain level of risk. And so basically after they changed some laws, they said, hey, you know what? Crowdfunding should be a way that people can raise money for the means of investing in different projects like real estate. And they also said, this is definitely not a high risk investment like some of these other private deals. So a lot of these platforms offer options for non-accredited investors. So I am personally invested in this platform here called Fundrise. I've been with them for about a year and a half. and I have really enjoyed the experience of being a Fundrise investor. Now, the returns after fees from Fundrise so far have ranged from 8.76% all the way to 12.42%. So the returns have been very solid, but I will say this, it is a very limited operating history because the laws just recently changed, allowing for this type of crowdfunded real estate investing. But Fundrise is really a great platform for it. Essentially what you're doing is pooling your money with investors from all over the United States and putting your money into real estate projects. Some of them are equity investments where you're actually an owner in that property and you're collecting dividend payments, or the rent is actually being paid out in the form of dividends to shareholders. And then you're also, in some cases, just a debt investor where you're holding the note and financing a project. The Fundrise platform itself is a really easy to understand, user-friendly platform, and it's all portfolio-based investing. So you essentially put your money into a different portfolio. Some are growth or income-oriented, and then you're invested across a collection of different real estate projects, and you can literally read up on every single one and understand exactly what your money is backing. Now that being said, as much as I do love Fundrise, I just want to go ahead and tell you guys it is a long-term investment, so I would not recommend crowdfunded real estate to anybody with less than a 5-year time horizon. However, if you are interested in being a longer-term investor and you want to get into private real estate without those high barriers to entry, I see it as one of the best options out there. Fundrise has already invested over $2.5 billion into real estate. They're a very trustworthy platform. Like I said, I have money with them and I plan on building out that portfolio. And the other advantage to crowdfunded real estate is that you are not on call, as you would be with a traditional physical real estate investment. So I have my crowdfunded real estate investment and I also own some physical real estate as an owner-occupied investor. And I'll tell you, just for example, this afternoon, I've got to go downstairs into my basement and have somebody come check out my geothermal cooling system, for example. So you don't have those headaches with crowdfunded real estate. Everything is managed for you. It's completely passive. With a traditional real estate investment, you have things that you're managing. You have to take care of the property, collect rent. Yes, the returns can be higher for sure, but it is definitely not as passive as just putting your money into a private crowdfunded real estate investment and then just earning your dividends and watching your money grow. So if Fundrise does interest you guys and you want to get some more information, that's going to be linked up down in the description below. Okay, so option number 4 for investing $1,000 is for somebody who's more of a hands-off type of investor. They want to put their money into a fund or into ETFs, but they don't want to have to figure it out themselves or figure out portfolio allocation. They don't want to be a stock picker. They just want somebody else to facilitate the entire process for them. Well, that is where these Robo Advisors definitely come in handy. So the way you used to go about investing was you would go to the office of a financial advisor and you would tell them you're looking to invest some money, and they would take that money, build out a portfolio for you, and invest you across multiple different assets and funds. Well, the problem with investing $1,000 is that most financial advisors wouldn't be willing to take you on as a client because you simply do not have enough money to invest with them for it to be worth their while. On the other hand, most financial advisors would charge a 1% annual asset management fee, which was basically the industry standard. So now there are a variety of these different robo advisors out there that do basically the same thing as a traditional financial advisor, but it's all algorithm and technology based. And as a result, it is significantly less expensive. So one of the most popular robo advisors out there today is called Betterment, and they charge just a 0.25% annual asset management fee. And since the entire process is basically handled electronically, there's no human involvement, and the minimum to get started is basically $0 because it doesn't necessarily cost them more money to bring on new accounts. So a robo-advisor is 100% passive investing. You basically go through a welcome survey where they ask you about your goals, what you're saving or investing for, and they will build out a portfolio based on your goals, based on your objectives, and what you're looking to do with that money. After that, you literally do nothing. You leave that money with them. They're going to continue to reallocate that money as needed, rebalance your portfolio. You don't have to do anything. So if you are interested in that type of investing, that would be a Robo Advisor, and it's going to be, completely passive, hands-off investing where there's really no active involvement on your part. You may decide to add more money with time, but basically with the Robo Advisor, it's just a set it and forget it investing strategy, letting somebody else do that work for you. And on a $1,000 investment, that 0.25% is just $2.50 per year. So we're not talking about very much money at all here to have your money fully managed and just not something you're worrying about day to day. So if you guys do want to check out Betterment, they're going to be linked up in the description below. That is one of the largest and most popular robo-advisors out there today. And as of April of 2019, as crazy as this sounds, Betterment had $16.4 billion of assets under management. So these robo-advisors have really come onto the scene here and kind of disrupted the traditional financial advisor industry by offering essentially the same exact service at a fraction of the price, and also being able to take on, much smaller accounts. So if you're into the passive, set it and forget it investing, putting $1,000 into a robo-advisor like Betterment is definitely an option you should look into. All right, so number 5 here, another way to invest $1,000. One of my favorites, once again, is to fund a Roth IRA. Now, most people have heard these terms before. They've heard of a 401k or a Roth IRA and a traditional IRA, and their head is spinning. They don't know what these things are. But if I were to tell people that they had to understand one thing about money other than compound interest, it would be understanding the power of a Roth IRA. Because for most people, it is the most powerful wealth building tool that is available to you anywhere out there. And unfortunately, not everybody is taking advantage of this because it's something you have to go out and do on your own. Your employer may help set up and facilitate a 401k plan for you. But as far as the Roth IRA goes, you're on your own as far as setting this up. Now, it's not difficult at all. It's actually a really simple process to open a Roth IRA. But it's a process nonetheless, and unfortunately a lot of people just skip over this entirely, or they are never made aware of this retirement account. So essentially this comes down to this question here of you've got this $1,000 to invest. Are you looking to invest this for the long haul for, in your retirement, or are you just looking to invest this money for a couple of years and then maybe, put it into a car or some other life purchase? Well, if you're open to investing your money for a much longer period of time, the Roth IRA in most cases is the best tool out there for this. So basically the way this works is you're taking that money, putting it into a retirement account, and then as long as you're not taking the earnings out of that account until you reach the retirement age, you don't pay any taxes on it. You're literally allowed to grow your money tax-free for decades in some cases, depending on how old you are, and not pay a penny in taxes as long as you don't touch the earnings. If you pull out your contributions, let's say you put $1,000 into your Roth IRA, 5 years from now you take that $1,000 out, you're completely allowed to do that. No penalties, no taxes, because you've already paid taxes on that money. So just so you guys know a little bit more about the Roth IRA here, for 2019, you're allowed to contribute up to $6,000 per year if you fall within the income limitations, which are quite high. Most people are within those limits. If you're over those limits, you just look at something called a backdoor Roth IRA or a IRA conversion. And if you're 50 or older, you can fund it with $7,000 per year in a bit of a catch-up period. So let's say, for example, you went out there, you opened up a Roth IRA, and you took $1,000 and you put it into an S&P 500 ETF exchange-traded fund. So essentially what you've done is you've taken that $1,000 and bought a very small piece of the 500 largest publicly traded US companies, aka the S&P 500. And if you look at investing advice from some of the greatest investors out there, that is essentially what Warren Buffett recommends, is putting your money into a low-fee S&P 500 index fund and just letting it sit there and build over time. So the average return from the stock market over the last 100 years or so is around 10%, and then we have inflation, which is around 2%, giving us an anticipated or realistic return of 8%. Now, you're not going to earn that every single year, but if you look over a long period of time, that's the average return you could expect. So let's say, for example, you took that $1,000 and you put it into a Roth IRA. S&P 500 ETF from age 20 to age 65. You put $1,000 in there once and then you forgot about it, never touched it, and just let it grow. Well, based on that 8% compounded return, you would have a balance at age 65 of $31,920.45, which is a heck of a return on just $1,000. So if you were to do this in a taxable account, you would have a tax bill in most cases, depending on your earnings, of about 20% of the earnings from that money. So you're looking at a tax bill here of around $6,000. So yeah, you have, $31,000 in your account here after you've invested, but now you're giving $6,000 back in taxes. This is your taxable account, and this is your Roth IRA account. If you put that money in a Roth IRA and you were tax sheltered, your tax bill is $0. So that is the power of the Roth IRA. It's honestly one of the best wealth building tools out there available to people. And again, even if you put that money in there, your contributions can come out anytime penalty free. You just can't touch the earnings. If you touch the earnings, that's when you'd get a penalty and have to pay taxes. So it's not like your money is untouchable. You just don't want to take out the earnings. You would only take out the contributions. So if you guys do decide that you want to open a Roth IRA, in my opinion, the best option out there is M1 Finance. They offer literally 100% free Roth IRAs and retirement accounts with a minimum balance of just $500. And then you can literally go right in there and invest your money into stocks, into bonds, into ETFs, all kinds of different options. So if you guys want to check out this free Roth IRA, that is going to be linked up down in the description below. Okay, now option number 6 for investing $1,000 is again one that people are probably going to say, oh, this is not what I want to hear, but it's something that you guys need to hear. And in most cases, one of the best investments that you can make with $1,000 is simply paying off some existing debt that you have. And so this kind of, again, ties in with that whole emergency fund we talked about early on, where you want to take that money, put it in an emergency fund to avoid the need for the use of credit cards for short-term binds or random unexpected expenses. But a lot of people out there have credit card debt. We know the average credit card interest rate is 19.24%, and average returns from investments out there, depending on what you're investing in, range from 8 to 12%. So if you had $1,000 in credit card debt and then you also had $1,000 invested, odds are you're paying more in interest than you're actually earning as a return from that investment. So just to show you guys an example of this, let's say you put $1,000 into the stock market and earned that 10% return. Well, you've now earned $100 on your $1,000 investment. Now, on the other hand, let's say you also carry a $1,000 balance on your credit card at 19.24% interest. Well, you also paid $192.40 of interest throughout that 1 year. So the net or the profitability of this is actually a loss of $92.40. So despite the fact that you earned $100 return from the stock market, you paid $192.40 to the credit card company and still had a loss of $92.40. So if you're out there and you have, credit card debt, high interest debt, unsecured debt, typically it's anything with an interest rate of 10% or more. Paying that off is honestly one of the best options you have when it comes to investing your $1,000. I know it sounds kind of backwards to take that money and put it into your debt, but to be honest with you guys, getting to that debt-free line or a point where you don't have any high interest debt is oftentimes one of the best investments that you can make. And then number 7 here, the last one on my list, again, one of my favorites, is any kind of self-education. Now, this could be something like going online and taking a course. This could be taking somebody out for dinner. This could be attending a seminar, whatever you guys want to call it. But this is simply taking that money and investing it into your skills, which should ultimately allow you to make more money. And one of my favorite ways to demonstrate this is, let's say you're making, a salary of $40,000 per year at the job that you have now. Well, let's say you're able to invest that $1,000 in yourself. Maybe you go online and you take some courses on how to, spruce up your resume, and then you get a slightly better job, just for example's sake. Let's say you're able to increase your earnings by just 1%, which is not a lot of money at all. Let's say you invest that $1,000 in yourself, and by investing in your skills, you've basically increased your earning potential by 1%, which is just $400 per year. If you were to calculate that 1% increase of just $400, well, over 40 years, that is a return of $16,000 on a $1,000 investment, which is a fantastic return. And odds are, if you do invest in your skills and you become more valuable to the marketplace, well, then you're going to get more than a 1% increase in pay. And to be honest with you guys, the number of opportunities now to learn skills online through, sites like Udemy, or even just taking online courses and learning new skills, you could easily do things to increase your earnings potential by even 10% or 20% without very much effort, other than just learning a new skill that is more valuable to the marketplace. And the other thing I would recommend too, if you're looking to learn skills from people or just learn from people who are doing something you're doing, literally just go up to them, say, hey, let me buy you lunch, let me buy you dinner, or let me pay you, for an hour of your time. I wanted to become a real estate investor in my local area, so that's basically what I did. I went around and I met real estate investors and I said, let me buy you lunch, let me pay you for an hour of your time. And most of them, they just let me buy them a coffee or buy them lunch and pick their brain. And that's not going to cost you $1,000, but the information I was able to gain from them, I had such a greater return than the cost of that lunch, or even, even if I were to give them $250 for an hour of their time, the ROI from that investment is going to be higher than just about anything else out there. But anyways, guys, that's going to wrap up this video. These are my 7 favorite ways to invest $1,000. Let me know in the comment section down below, how did you invest your first $1,000? If you're already invested, I would love to hear what you guys think and where you began investing. And like I said, if you are new to investing and you want to learn more about the basics, check out that completely free investing course, top link in the description below, or it's freeinvestmentcourse.com. If you guys are new to the channel, don't forget to subscribe and hit that bell for notifications, and I hope to see you in the next video.